Hi, this is Sean Hyman from mywealth.com. I want to talk to you about something I found the other day when I was just flipping through my charts, and I noticed a huge pivotal shift that is taking place right now as we speak, and I want to talk to you about it, and it's the fall of the U.S. dollar, particularly the broad U.S. dollar index. So let's talk about why.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you today about our topic, which is the dollar loses its luster now that the coast is clear. And I want to talk to you about what I mean by that. But first I want to show you a visual of this. This is the U.S. dollar index daily chart 1 year. So each candle there represents a day of activity, and it goes back a year into the past. And I did a story earlier on this when I talked about Obama talking about how strong our dollar was, but yet the dollar index couldn't make a new high, and how he was now a currency analyst and all this kind of thing. Well, that was back when it was failing to make a new high. Well, now it's further gone through that and gone down through the uptrend line, and has now broken its uptrend. So the dollar's best glory days are behind it now once again. And let's talk about some of those reasons why as I show you some more on this. So why's the dollar's luck turning right now? Well, the answer is a sentiment shift. And what do I mean by that? Well, the G7, former Fed Chairman Volcker, which is on Obama's committee for economic recovery, and also Bernanke have all now stated that the worst may very well be over. Bernanke talks about these new green shoots he sees popping up and things of that sort. So it's all this terminology out there that really discourages the continuance of defensive plays that has been like the dollar and the Japanese yen and the Swiss franc, primarily the dollar and yen. And so money is inclined to come out of the dollar if they feel that the coast is clear. Now, another reason is all the fear gauges out there that have peaked have been diminishing. And I'll show you one right here, which is the VIX, called the Volatility Index. And while this technically tracks volatility and the fear gauges in the S&P 500, it has its ramifications in every market. So if fear is high in stocks, it's high in commodities, it's high in currencies, etc. So it's a good general gauge to use, even if it's not just looking at the S&P 500 or U.S. stocks. And as you can see, back in last September all the way into October, I mean, this thing just shot up just like crazy. Of course, that's when the credit crunch was at its peak. But ever since then, the fear gauge has been dying off. Now, it took several months to come off of its most severe levels. But now you can just see it keeps making lower lows and lower highs, as noted by that arrow there. And so, when the fear gauges, when the fear starts to subside and fear dissipates, the offensive players come back onto the field, which are higher yielding currencies. And while all currencies right now aren't higher yielding, money will return to the ones that tend to be once inflation starts back and interest rates start to have to climb. So the last place really that they would want to be is in the dollar. Now, another thing out there that the dollar really has against it now is, commodities had fallen for the past year just precipitously. And this is a chart of oil. And notice it had been in a downtrend. I mean, falling from over $147 a barrel down to $33 a barrel. And it did that in December was its lows, and it's been slowly rising ever since. Well, it's been rising, but as of March and on into April, it's broken its downtrend, and we're now into the start of an uptrend in the oil market. So, and other commodities are looking the same way as well. So, as commodities go up, the dollar tends to get weighted down, and as the dollar goes up, commodities tend to get weighted down. So it's almost like you can see them on the either side of a teeter-totter, basically. And so now that oil has been holding 50 to 55 fairly steadily and broken above the downtrend line, I believe you're going to see it head higher. That's a bad sign for consumers in that it's going to take more of their dollars that they would spend on other things to go back into their gas tank. So take that as a note and start saving up your money now for higher gas prices ahead. However, for oil investors like myself, this is going to to help us hedge our costs. Now, the euro is the biggest beneficiary when the US dollar index falls, and why is that? Well, this is a weighted index, and you'll see the weightings below, and while it's comprised of 6 currencies, literally over half of it is the euro. 57.6% of it is the euro, and so if the dollar index breaks down, the first currency pair that we want to look to is the euro dollar to see and watch it, to confirm that it breaks upward. And that's exactly what we have here. Even on the eve of the ECB's rate decision coming on Thursday, which is tomorrow, and the expectations of rates going from 1.25% down to 1%, even still, the euro dollar has broken out of its consolidation that it's been in for the last 6 months. So you can see that from the breakout of the downtrend line there, and the MACD's signaling brighter days to come. And keep in mind, if you're not familiar with all that type of stuff like trend lines and MACD and all these technical indicators, don't worry about that, because we teach you all these type of tools in the courses. So the thought here is to get the spirit of the message, and then you can really learn the letter of it in the courses, so that you'll know yourself how to interpret these ideas and how to form your own ideas, just like we come up with tradable ideas all the time. So the euro dollar has broken upward even on the eve of a rate decision, which is an unknown, and so I think that's really a sign of strength. Now, I don't think it's going to run away really to the upside before the rate decision comes out and Trichet's comments come out. As a matter of fact, it could have a lot of volatility and even a little bit of a pullback around that time. However, I do feel that the euro's best days are ahead of it once again, and the dollar's best days are behind it once again, once we move past this ECB rate decision and Trichet press conference on Thursday morning. So, in order to learn more about currencies, trend lines, technical indicators, fundamental aspects, these sort of things, I'd encourage you to get in our courses. And how do you do that? You go to www.mywealth.com, click on the Courses tab, and which you see highlighted on this screen, and that'll show you all of our courses. The furthest one to the right is the currency course. You can click on it and learn more about it or sign up there. Also, you can call us at 866-257-9677 is another way you can reach us. Or you'll also see our email circled as well, sales@mywealth.com. Any of these, you can feel free to reach us at to find out more about our courses, gain more information and insight, and also sign up. So whatever you do, don't wait. Get in a course. Get educated today at mywealth.com.
Hope you enjoyed that today. As you can see, there's a myriad of factors as to why the dollar index is falling, from rising commodities, sentiment shift, comments from officials that get a lot of data and really know what they're talking about, because they get a lot of real-time data into their organizations like the U.S. Fed. For instance, and so the worst evidently is behind the U.S. economy, the global economy, so therefore there's no reason to continue on in the defensive plays of the U.S. dollar. Now it's time to go in search of greener pastures, for instance, such as the euro, which is called the anti-dollar. It's the next most liquid market when you come outside the U.S. dollar is going into the euro, so that's why we see the euro as a huge beneficiary. Now, if you want to get started in the courses, and so you can learn how to draw trend lines, understand the MACD indicator and other indicators like we talked about, understand what time frames you should probably trade on, and things you should look at as far as fundamental news announcements and who you should listen to and that sort of thing, enroll in our currency course today. You can do that by going to www.mywealth.com, clicking on the Courses tab, clicking on the currency course, and get started today. We'll see you in the course. Thanks so much. Bye-bye.